Welcome everybody to our latest segment of our Four Horsemen of the Investing Apocalypse series. Again, this series is really dedicated to looking at the four main threats to investors reaching their financial goals outside of personal financial issues to hopefully be of some help. Today we're going to look at the media. And again, when we say media, we're really kind of talking about any actor out there giving you so-called actionable advice that is far more in their interest than it is in yours. And the media just is a great example of that, but that certainly can apply to brokers looking for a new commission or brokerage houses looking to scare up trading activity for a profit. Great for them, not great for you. The reality is scares do happen. Tragedies happen. Some of these headlines are certainly real. The issue is extrapolating them out to their worst possible conclusion or assuming that these unfortunate realities are going to take down the market, take down the global economy. If we look at this chart, which looks back over the last 10 years, each of these phrases in white and black are various headlines that you would have seen that were supposedly going to, again, be a reason to be fearful, scare you out of the markets. I know it's too small to read. I'm going to look at my own notes, but the point here is it's virtually continuous. In fact, one could argue, almost 100% of the time there's something you're being told that you should be scared about, when the reality is markets still trudge higher 75% of the time. Some of the threats, again, over the last 8 years that people have been brought up that were going to take down the markets, you had Brexit, you had the Greece financial crisis, you had the Spanish succession issue, you had the end of quantitative easing and all those people out there that saying, hey, this is just about paper printing that pushed the market up and as soon as it ends, it'll be the end of the market. Hasn't happened yet. Various terrorist attacks. Half the country being upset when Obama got elected. Half the country being upset when Trump got elected. The Ebola outbreak. Even really serious issues like the conflict with North Korea that scared a lot of people out of the market last year haven't slowed the market down. Russia invading Ukraine a few years ago didn't slow the market down. And the reason for it is people, markets are just very resilient things. And trust me, I get it. I hear it all the time. How can all of Trump's tweets and the dysfunction in DC, let alone these geopolitical scares, not be enough? And the reason, if we really step back, is this. While those things, tragic as they may be, unfortunate as they may be, are real, very few of them keep any of us from putting forth a great effort in our day-to-day lives, whether that's with friends, family, or our jobs. And at the end of the day, the stock market really is all those individual stories pulled together. And the truth is, entrepreneurs continue to start great companies, innovators come out with amazing breakthroughs, artists create amazing art, and that's what we would encourage you to focus on far more than anything that the media might be trotting out to try to scare you. Just a real quick look at where we're at this year. Certainly a tough quarter. And as I use this analogy in the very first video, if you were to come down from space, have various segments from television or headlines, you would assume the stock market must have just burned. And yet here we are at the end of the quarter today with the market down less than 1%. And that's a perfect example of what I'm talking about. Look, being down is never fun. It is a part and a reality of being an investor. But again, compare what you've heard, what you've read to the reality of the situation, and I think you'll see what I'm talking about. Here's some recent headlines, again, that we've seen just this week as I was preparing for this week's commentary. Saw one, Dow down 3% for March. Well, that was true. It's also true that the market's about back to even for the year. So do we want to spend this negatively or do we want to spend this positively? I saw a bit on the fundamentals of investing and a fundamental analysis of the markets, and literally the guy delivered it with a straight face, and one of the bullet points said the social media crisis. Now look, I know that makes for great headlines. I know people are checking their Facebook privacy settings. It's not going to be something that takes down the US economy. Saw a headline yesterday, 2.3 trillion of the Trump rally wiped off the table. Well, there's still $4 trillion of gains that they could have been talking about. But more importantly, this was never Trump's rally, like the rally before wasn't Obama's, like the 90s weren't Clinton's. This is about people, not presidents. And if you can keep your focus on those people that you know, the stories you read about, you're going to be far more apt to be a great investor than trying to focus on politics and presidents. I'll close with this. At the end of the day, I'm not telling you to never watch TV. I'm not telling you to not watch CNBC. I'm just telling you, watch those things for entertainment, not necessarily for how to prep and plan for everything that may come down the way. I was mentioning to the guys earlier today, watching CNBC or any other news station for that matter to know where markets are going is a lot like watching Men in Black or Independence Day to be prepared for an alien invasion. It's just a misplaced focus. Great for entertainment, not great for preparing for the future. Our conviction and confidence in working with clients comes from this. Great financial planning, great plan design certainly can play an important role, but so does a knowledge of history. And that history is one that people are resilient, they persevere, and just like people do, markets do. So all these scares and tragedies are an unfortunate reality of life. They don't keep us from moving forward as individuals, and they won't keep the markets moving forward over time either, and helping you reach your financial goals. Thank you so much for joining us. We hope you're finding this series of help. We look forward to covering markets and how you can prepare for the unexpected ways they work and setting proper expectation, and of course, many other topics to come. Thanks so much.